but you haven't achieved that wipeout where you're going to see, let's say, 90% of all cryptocurrencies go to zero. And they think that's what has to happen. So there's some really interesting stuff going on. We've seen the commodities just get absolutely annihilated. And again, part of this is the massive move up in the dollar that has taken hold over the last, really, since the beginning of the year. But it seems like the floodgates were holding for a lot of commodities like oil and gold and silver. They weren't really collapsing early in the year when the dollar was pushing up. But this last push seems to be like the straw that broke the camel's back. And we've seen massive declines, and we're seeing copper just crashing down. So it's been amazing, but there are opportunities. These are the types of markets when you see these kind of crazy drops that you have to start getting interested as a trader. So that's where I am. To be honest, I was inching into some GDX today, which is the gold miners. I was playing around with a little SLV silver down in these ranges. And again, we can look at some charts like that and take a look for sure. So when we have a dramatic near-term move like we've seen in the gold miners or gold itself, my time horizon is relatively short for my trades. It's looking for that snapback. Think about a rubber band. You're pulling that rubber band, and when you let it go, it snaps back. So for me as a swing trader, I really love these quick moves because you get this quick reaction. It's almost like dropping a ball from a 10-story building. When it hits the ground, you get this big bounce. And that's what we want to capture when we're trading these. Now, I will say this, I still continue to love gold longer term. I'm a huge gold bug in terms of thinking it still has a ton of upside to go. But again, it's fighting this tide of the dollar just ripping, which is hard. I mean, for a commodity that's traded in US dollars, it's just hard for gold to fight that upward hill.
But a counter argument I heard recently was, look, that panic selling event often comes on the heels of the newer, less experienced investors getting scared and pulling the trigger. Now, those newer, less experienced investors, they're not so much going to equities as they went to crypto, where we did see that capitulation. So maybe that panic selling event already happened. I was looking in the wrong place. It didn't happen in equities. It happened in crypto. Any thoughts on that?
Yeah, so I'm even in the camp where we haven't even seen all out capitulation in crypto yet. So now, again, my early career was trading through the .coms. That was when I first started. And the .com similarity, and this is why bubbles are very similar, is because we as humans are trading, right? And we are ruled by the same emotions. So in every bubble, there's max greed. Everyone thinks it's so easy. Oh, you can throw that dart at that board and just make so much money. That's a bubble. Everyone's making money. The problem is bubbles collapse. And in the .com era, we saw a ton of .coms go out of business, and we saw many get bought out for pennies on the dollar. Well, we're just starting to see that in crypto, right? I think Voyager filed for bankruptcy. Celsius is having issues. We saw the Terra Luna collapse. So you're starting to see that, but you haven't achieved that wipeout where you're going to see, let's say, 90% of all cryptocurrencies go to zero. And they think that's what has to happen. If you look at the .com bubble, when we emerged out of that, you basically had a handful of .coms. You had Amazon, you had a few other ones out there that survived. Everything else either got bought out or essentially went to zero and went into bankruptcy. So I think we're due for a cryptocurrency bounce here. I think we'll get up to about 25,000, maybe 28. But I do think you have more downside in crypto, at least to 12. We need to see people just being like, oh my goodness, crypto's done. When people literally give up, I mean, this happened in 2018 as well, after the 2017 high. There was this, no one wanted to talk about crypto. It was like Fight Club. You just didn't talk about it, right? Yeah. And that was the key when the bottom was in. We haven't gotten to that point yet in crypto. So with the markets, and let me pivot because I know you asked me about the markets, is the markets are in that same position. We've seen a drop, but you haven't even got close to capitulation, right? And so just to show my chart of the NASDAQ here, or the QQQ, at the very least, I think we have to go down to the pre-COVID highs. I mean, that's just, to me, the pre-COVID highs are even just going there, even if we don't go into a recession, meaning that the Fed, if they're really taking out all the liquidity that was put in during the COVID craziness of just printing trillions of dollars. Mm-hmm. Well, in the very least, if they're removing that, we have to go back to that pivot high. If we start going into a recession, then you start looking at a trend line like this, which would be the longer trend going back to about 2015. Right. And both of these, by the way, are quite a bit lower. I mean, we're talking about 15% lower here, and this would be about 20% lower at that point, or maybe even a little bit more. So I think that the equity markets still have a long way to go. We haven't even seen an earnings recession yet, where earnings start to drop versus still going higher. The consumer is certainly pulling back now. Even after the reopening we're seeing in the US here, consumer being much, much more careful. So I think, again, equity markets still have more downside, and after a bounce, crypto likely as well.
And so there's a lot of talk in the media right now about, recession coming to the US. What are your thoughts there, Gareth?
I do think so. I think the Fed is just like they always do. They're late to the party. And when they're late to the party, they overcompensate. So they're the person that comes in late and they have to make that big scene and jump up and down so everyone notices them at the party. And not to make light of it, because it's obviously affecting the economy, but that's what they're doing. They're overcompensating. They did this in 2009 when we saw the collapse. They came out with gangbusters and printed tons of money. Now we're seeing it again on the opposite side, where inflation finally reared its ugly head, and now they're trying to play catch up. And the problem with catch up is that they're going to go too far and they're going to push us into recession. So again, I think by the end of 2022 to early 2023, we're probably talking about a recession here. So the main thing right now, and this is what I have currently, which I'm in the long term, I have 5% of my net worth in gold. And usually most of it's physical gold, to be honest. And again, that I look at that like insurance, where if I woke up tomorrow and the grid was down, the banks were closed, I couldn't get money out of an ATM, well, at least I got some gold, right? And I think that's important to think about, where it's kind of your insurance policy against all out collapse of the system. Having said that, I also hold for the next multiple years other investments in silver, as well as other metals. Platinum's down here, starting to accumulate some platinum. Some of these metals where I believe that inflation is going to be higher than 2% for the longer term, I think that's really going to be beneficial. So those are my main ones. I do plan on picking up Bitcoin. And in fact, in all fairness, at 19,000, I started my beginning hodl position, to use that term, where I basically allocated a percentage of my net worth, same thing, for Bitcoin. And I bought 1/6 of what I want to accumulate at 19. And then basically every 2,000-3,000 lower, I'll buy another 1/6. So up to 5 additional entries. That's dollar cost averaging, safest thing to do. Doesn't guarantee a winning trade, but at least I'm not guessing at a particular low and staking the whole entire amount on that low. So I would strongly recommend people do that as investors. Never believe, and this is interesting. Let me say this. When I was a retail new investor and trader, I would always go into a trade gangbusters because I was like, I'm going to be right. This is a great point. It's going to play out to my thesis. And then I got hammered so many times that I started to say, wait a minute, maybe I should just buy a small percentage of what I want to own. And then if it does go lower, like it often does, I can pick up a little bit more. Usually my thesis ends up being correct. The timing is always the trickiest thing. So dollar cost averaging helps on that front immensely. I'm a big long-term believer in crypto. As much as I think it can go lower, and I do think eventually it will, just if you're doing small positions, you just dollar cost average and then let things take their course. And remember that bear markets and winters, they're going to make you think you're going to, it's going to make anyone that's bullish panic. That's what a bear market does when it's bottoming out. So you have to mentally be prepared for that and basically re-ask yourself, is my thesis intact? Is the Fed still going to print money during the next, depression/recession? Or is crypto still a run on Bitcoin of 21 million? All these things you have to just continue to say to yourself. When people put all their money in, they get so nervous, you get so emotional that when Bitcoin does flip around, it's going to make you generally do the wrong thing at the wrong time. By diversifying, it's kind of like, all right, it sucks that it's down there, but not the end of the world, so I'm going to stick with it. And those are the traders and investors that end up making money.